All right, so we're going to get going here. I did a great introduction back when the microphone wasn't working, so hopefully Tammy and I can appreciate that introduction. But basically, Tammy, we're sitting here talking about this, and we know that things are changing on a lot of legislation.
Right. So it's changing quickly. Well, I say it's changing quickly. They're coming out with information quickly.
Yeah.
Nothing's really passed, so nothing's changed as far as we're concerned.
Right. So what we're going to spend some time here this morning talking about is a little bit about the current bill, the current legislation that's moving through, the stimulus checks that are going to come along with that. We're also going to go back and talk a little bit about the Family First Act, the CARES Act, some of the rules the state of Alabama is enacting relative to the various benefits and to the federal grants and such as that are out there. We're going to talk about loan forgiveness on the first round of PPP. That's important to a lot of business owners, and it's very important that we kind of share with you our point of view and perspective on some of that. We're going to talk a little bit about round number 2 of PPP. That's one of those things we don't necessarily know everything. Yeah, but we're going to talk a little bit about it, and then we're going to kind of wrap up with some other things that Tammy wants to cover. And so I'm Dennis Sherrin, and I'm member of Avizo Group, and I have with me our resident expert here, Tammy Busby, who's also a critical part of our firm. And we're going to just kind of kick this off. So Tammy, we talked a little bit before about the things, we know some things, there's things we don't know. Right now, if we look at, let's talk about stimulus checks to start with, and what's going on with the stimulus checks, I guess people received already, and possibly what's going on with the new bill.
So the stimulus checks that we received back in the summer, $1,200 for individuals, for taxpayers, $500 for children. If you got a check based on your 2018 or 2019 income tax return, you get to keep that check, basically. And it's not taxable to you. It would have been a tax credit on your 2020 tax return. The credit should have been based on your 2020 income tax return, although they had to have something based on, so they based them on 2018. If you did not, but based on your 2020 tax return, you're entitled to one, then you will get that credit on your 2020 1040 when it's filed. If you got a check, but you were not entitled to it based on your 2020 income tax return, then you get to keep the money. They're not going to take it back from you. So that's where the initial checks are standing at this point.
Yeah, so I mean, basically, if you got a check, that was like an advance payment.
Correct.
Right, and we'll help you settle that when you file your 2020 tax return.
Correct.
But it's one of those things that effectively is not a taxable item.
Correct. And your tax accountant, if it is not us, will ask you if you got a check or not, so that they can make sure that they calculate that correctly on your 2020 income tax return.
And so a lot of people got those checks through direct deposit.
Correct.
Or something like that. So
or a debit card.
Or a debit card. So if it got direct deposit to your bank, you might want to go back and check and see when it hit, just to make sure you did get it.
Right.
I mean, got that out there.
Right. Now, the looming question for most people, especially on social media, is, are we going to get another check?
Good question. Are we going to get another check?
Maybe.
Maybe.
So as I told Dennis earlier today, I didn't lie, but I basically told 4 clients yesterday that stimulus checks for individuals were not on the table at this point. At some time yesterday, they changed their tune on the stimulus bill, and they have included stimulus checks to individuals. They're looking like they're going to be between $600 and $700. That number may change. I know that Bernie Sanders is pushing for another $1,200 check. Mm-hmm. Some people are pushing for no checks. So that could be a sticking point in this legislation, which is why I think they've reduced it to $600. They've kind of cut it in half, but it's $600 for everybody if you meet the income requirements. So in my family, it's me, my spouse, and my child. We would each get $600 if we qualify.
I see. Yeah. It's one of those things that it sounds like it's going to happen, but we don't know if it's going to happen because as we're speaking, they're negotiating. And honestly, if you're watching this on a recording, they might still be negotiating at the rate they're moving.
Right. And we looked pretty much right before we went live, and the latest this morning they're pretty close. About 30 minutes ago, they announced that there may be a stopgap in place to keep the government from shutting down so that they can make these decisions, hopefully by this weekend.
So it's maybe a point where touch on a few of the things that are in these bills, and some of them may be the reasons it's slowing it down, but then what are some of the things in this round of the stimulus that they're
So
negotiating?
originally it was a $908 billion package. I'm sorry, yeah, no, $1 billion package. They have now cut that into two separate packages. One is just under $200 billion. And they did that because those two items that they've pulled out to put in a separate bill are basically one sticking point for the Republicans and one sticking point for the Democrats. So the Democrats want additional funding for state, city, and tribal entities. And the Republicans are somewhat against that. The Republicans want liability protection for entities, schools, governments, doctors, things like that, related to the coronavirus, and the Democrats are against that. So they've pulled those two items out, and they're trying to put those in a separate bill. The other bill that's remaining is basically the stimulus package, and it has gone from about $700 billion to $900 billion now. Because they've included that stimulus check to individuals in it. They're trying to keep it under $1 trillion, which I think is another reason why they probably split those two bills out. But the biggest issues for, especially for our clients, is the PPP2, the second round of PPP funding, the unemployment funding, where they are going to extend the deadline for unemployment from December 26th. And we don't know how far they're going to extend it, but they're talking about extending that out. So right now, there's about 10 million Americans that are on unemployment that will end December 26th if they don't do something.
Right.
And they're talking about another $300 federal additional amount for unemployment. So it was $600 back at the beginning when we started this in March or April. Now they're talking about an additional $300.
So that would be 300 at the federal level.
At the federal level, plus you
with
get the state.
from the state level.
Right.
And okay.
The other things that are in the $900 billion bill are vaccine distribution, funding for vaccine distributions, school funding because of schools having to go virtual or having to have additional spaces or additional equipment to keep social distancing in place. Stimulus checks, we've already talked about that. And then there's an additional $25 billion that most people haven't heard about, but it's for help with renters paying their rent, food aid and farm subsidies. And then there's another $10 billion that goes to the United States Postal Service.
So a lot of different things, a lot of dollars.
A lot of dollars.
But it just rolls off your tongue so easily when you just say, oh, it's just another
It's just $900 billion.
Yeah, $900 billion. So, yeah.
And it's all borrowed money, which it's not that I don't think that it needs to happen, but we all need to remember that it's going to have to be paid back somehow.
Yeah, there's a consequence down the road that all taxpayers will ultimately participate in.
Correct.
Like
and
that.
The latest I heard for deadlines on this, now obviously there's another bill in place. It's $1.4 trillion, and that's the government funding bill. So that's what keeps the government from shutting down after Friday at midnight. So that has to be passed, or a stopgap measure has to be passed. The latest I heard is that they would like for everything to be passed no later than Saturday night, so that House and Senate have passed it and the president can sign it Monday or Tuesday before Christmas. If that doesn't happen, according to Mitch McConnell, they're going to stay until they get something resolved.
Yeah, I've heard that quote from both sides of the aisle actually now. Yeah.
His was the one that was most publicized.
Absolutely. Yeah. So we know we got some more to talk on loan forgiveness and all that, but let's jump into some of the other things that are still out there that are coming out. And the first one that bring up is the Family First Act and dealing with PTO. And how taxpayers may be affected if students go virtual again.
So the Families First Coronavirus Response Act that was enacted, that was the first act that was enacted prior to CARES. And that is what gave 2 weeks of paid sick leave to employees, or 10 weeks of family leave that the government would then reimburse the employer through their 941 payments. That actually expires December 31st. So if you're like me and you have a child that is in Baldwin County school system and they are going to be virtual for any child that is in the brick and mortar system for the first week that they're back in January. So January 5th through the 10th, they're going to be virtual. If I had to stay at home, which I can stay at home and work, but if I couldn't, if I was, a cashier or a waitress or something that couldn't stay at home and work, but I had to stay at home with my child, if this had happened prior to December 31st, the government would pay my employer for me to be out for up to 2 weeks. Mm-hmm. Now the government is not going to pay my employer. So if I use sick leave or PTO or something, and I accrue based on the hours worked, I could be negative come January 15th.
Right. Yeah. So
and that's just one example.
Yeah, and that's expiring, and there's nothing in the new legislation addressing that.
If they are discussing it, they are not making it public,
Right.
which it's not, it's not one of those things that people are thinking about. I don't think they're more interested in PPP2 and stimulus checks and things like that, but keeping the government running. However, it is going to be very important for people, especially if after the Christmas holidays, we end up with another spike and people are at home.
The far-reaching ramifications of all these actions and keeping up with them, it's a challenge. You got to, in some ways, I don't envy, but I do appreciate the effort that has to take place by the various representatives, senators, and all of that.
Right.
But on the other side of that, goodness gracious. So the CARES Act, the original CARES Act, it's gone back there, and the dozens of interim final rulings on the CARES Act is kind of kept. It's still there, and there's still matters relative to that exist and are affecting businesses and individuals and such as that. Anything right now that we need to tell?
So there's two big items, or two of the biggest items in the CARES Act, exclusive of PPP and stimulus checks. One of them is that they allow NOLs, net operating losses, that were generated in 2018, 19, 20 to be carried back to 5 years. What we have told people is let's wait and let's get to 2020 and kind of see what's happening to see, how best it's going to benefit you. But it could be that we can now amend a tax return for 2018 or 2019 and carry those NOLs back to times that you had income so that we can get you some money. So,
and now, is that for business owners that are in a C corporation, or is that, owners of
it could be a Schedule C, it could be a C Corp, it could be anything that generates a net operating loss.
If anything creates a loss, there's
potential to carry it back. Correct.
Yeah. So there's some value in that, because they're giving us a time period to carry some things back that they haven't done recently.
Correct. And instead of you having to wait and carry it forward, now I can carry it back and get money today.
Right. Yeah. And another way to try to reinvigorate the economy.
Correct.
We're just trying to get some funds back out there.
Correct. The other fairly big item that needs to be mentioned is most of us do not itemize anymore because they've increased the standard deduction, but they're allowing a $300 above the line charitable deduction for anyone. So I can donate $300 to a charitable organization. It has to be a qualified charitable organization. And I can take up to $300 on the face of my return without having to itemize my deductions. The other thing is they're going to do away with the limits on charitable contributions. So if I'm already going to itemize, but I had a limit because of income, those limits are no longer in place. Also, if I was for example, a restaurant, and I donated food because I was going to be shut down, I donated that to a food pantry or to a church or something like that, I can take a greater deduction in 2020 than I would have been allowed. They've increased those contributions for food donations.
Right.
So those are the two biggest items are the NOLs and the charitable contributions. There's a couple of little things in there, but it doesn't really.
That's the significant things, particularly the charitable contributions. It's a change in that. So the charitable contribution, the elimination of the limit on the amount you could deduct. If you're a large giver, there were restrictions. Is there is that from here forward, or are they
2020.
just for 2020?
Mhm.
Okay, so if anyone wants to make another big contribution, they've got about 14 days,
Mhm.
okay, to do that. And then if you want to give $300, if you're normally can't itemize, go ahead and do that $300
Right.
before December 31st. And qualified organization, most of you would know, but your church is going to fit that, and of course most of the local charitable organizations around here are qualified organizations
Right.
that accept charitable contributions. So good stuff. So let's flip over to the state of Alabama.
So Governor Ivy
Mm-hmm.
has a temporary proclamation in place, and it is temporary because that's all she's allowed to do. However, she has passed this proclamation because legislation in the state of Alabama should have passed this. It was on the table to be passed when they had to cease meeting because of COVID. So what she has done is any payments from the CARES Act, so your stimulus check, the $1,200 or $500 that you got as a stimulus check, the PPP loans that are forgiven, or the advance payments on the EIDLs. Those amounts, she has now stated, will be tax exempt in the state of Alabama. So that was a question because we don't follow federal rules for everything.
Right.
We start from scratch and calculate income separate from federal. So now we follow those the same way. Now, the problem with the way it's written, which I don't disagree with, but the problem with the way it's written is that it follows federal funding. And right now, the deductions, the expenses that should be deductible that are forgiven under my PPP are not deductible.
Right. Yeah. So there's still a big question until.
And the state's following the federal. So
the state following the federal until that question is resolved by the federal.
Mm-hmm.
We don't really know
what's
the
going to happen.
resolution.
Right. And there is a bill in the House, completely separate bill in the House, a completely separate bill in the Senate. It's also a portion of the government funding, the $1.4 trillion package that I talked about. It's part of the $900 billion package, the stimulus package that we've talked about. But as of right now, none of that has been passed. So as of right now, you basically are being taxed on your PPP funds that are forgiven.
Yeah, so let's jump on that for a second, and we can come back to a couple other things on the state. With loan forgiveness, as it is right now, your PPP loan, most if not all, should be forgiven if you've met the requirements to obtain loan forgiveness, and thus that loan forgiveness would then become income to your business, your operation, your organization. They've said that loan forgiveness is not taxable.
Correct.
Current federal law says that expenses paid with tax-exempt income, which that loan forgiveness would be, aren't deductible.
Correct. IRS code.
Yeah. So the IRS has said that. We all know Congress said the intent of the PPP was to not create any taxable event for taxpayers, and right now, the expenses you paid with your PPP loan can't be deducted. And in effect, that causes a taxable event for you as a taxpayer.
Correct.
So where do we think we're going to get on deductibility?
So my comment, and I know most of y'all on the call have probably heard me say this. I know everybody in the office has heard me say this, but the IRS does not want to be stuck with having to tax people on this money. So back in May, early June, somewhere in there, they issued a statement, and it was picked up by every publication that I can think of that said, hey, just FYI, those expenses are not deductible. Well, nothing was done. Congress didn't do anything about it. And so October, November rolled around, and now we have a IRS regulation and a procedure that tells you how to handle these. So the IRS is serious that this is not going to be deducted unless Congress fixes it. Mm-hmm. So I think they're pushing the envelope there. They're making sure that everybody understands that it can be fixed, but we can't fix it.
Right.
So as I said, it's in every package that's being proposed. It just hasn't passed yet. So we anticipate it being fixed.
Right.
But as of now, our tax planning, we give everybody the best case scenario and the worst case scenario so that they know.
So our stance right now on it is until we know that that is deductible. Let's say it doesn't happen this week, that somehow doesn't end up in a bill and it carries on into early 2021. There's some decisions that need to be made in terms of filing tax returns at that point.
Right. So the firm as a whole has decided that unless they say they are not going to pass something, if Congress comes out and says we're not going to fix the problem, which I don't think they will, but if they do, then it's business as usual. We file, it's a taxable event. I'm very, very sorry, but if they don't, and if we keep rolling with we intend to fix this, we just haven't yet, then we will wait to file returns until they fix it or until we run out of extensions.
Yeah.
So we will, if they haven't fixed it by March 15th, we'll be extending tax returns because we don't want to have to amend them if we don't have to.
Yeah, and I think that was the thinking we had behind that. If we file your tax return, then we have to go back and amend it.
Right.
We'd rather not do those.
Correct.
Do it that way. So that's out there. I believe all the lobbying groups that are really working hard on this all believe this is going to happen. American Institute of CPAs in particular has said it, but it's one of those things we don't really know.
No, and I mean, just our, governing body, all 50 states and all the territories, societies have sent in letters. The AICPA has sent in a letter. They've encouraged taxpayers to send in letters to their representatives. I know that the chambers around here have sent out draft letters for you to send in to your representatives, trying to get them to take care of this. So there is a huge push to fix this.
Yeah.
It just hasn't been fixed yet.
Yeah. So that's a squirrely thing that's out there. We just simply want to make sure you're aware of that. We're studying it every moment that we can and trying to make sure what's going on there. So let's jump back. There's a couple more things in the state of Alabama. We talked about how they're following federal law. There's some state grants that were provided, right?
Correct. So we've had state grants that went out for various entities. Those are taxable grants. Those are not tax exempt. And I know that we're still waiting on funding for the Revive Plus. The last $20,000 that people could apply for. The money has to be spent by 12/31. So I know that they're trying to get those worked up, and every day we see one or two more that have been approved. But we're still working on those.
Right. And then the last thing is the unemployment in the state of Alabama
is taxable.
Well,
any unemployment.
Yes.
But so it's federally taxable and it's state taxable in the state of Alabama. So if you received unemployment, they did not withhold taxes on that. So you'll owe money. When we come down to it.
Yeah, and it's absolutely, you got to report it.
Correct. And you'll get a 1099 for it.
Right. So you've got that. So then moving back to loan forgiveness. So what we want to toss out there a little bit is there's a lot going on right now. Everyone that got a PPP loan in the first round or the first series of PPP loans now is working with their banks. A lot of these banks or some of the banks, let's say, are asking them to go ahead and file the paperwork to get their loans forgiven. But there's still some questions as to who is going to have to provide documentation and not. And so based on that, we are taking a position that requesting loan forgiveness right now it may not be the best move. Ultimately, though, we know where the loan forgiveness has to be reported.
Right. So the SBA did what they could to fix part of the problem, and they came out with an easy form. So it made it a little bit easier. You didn't have to answer quite so many questions. There weren't so many pages in the form. If you met the criteria, you could file an EZ form. However, there is legislation that they are trying to pass, and it is part of the $900 billion package that says if your loan was $150,000 or less, that you can blanket apply for forgiveness. So basically, you're going to answer a few questions. You're going to certify that you have the documentation available, proves that you got 100% forgiveness. I don't turn in the documentation to the bank. The bank doesn't have to shuffle through it. The SBA doesn't shuffle through it today to approve it. It's automatically approved. We are anticipating that to be included in the bill. We're not anticipating it to be pulled out. Therefore, at that point, anybody that had $150,000 or less, that we know you had payroll and we know that you didn't have any extenuating circumstances for not qualifying for 100% forgiveness, we will have you sign the paperwork and send it in and we'll be done. We will keep the paperwork.
Right.
And you have to have the paperwork because they can audit you for up to 6 years.
Yeah. But that's a huge difference from where it is right now, and it's worth
it. Yeah, if you have a less than $150,000 loan, it is worthwhile to hold off just a little bit longer.
Mm-hmm.
The expenses are going to be either included or not included in your 2020 income tax return. It's going to affect that return because you had to have spent all the money by December 31st,
Mm-hmm.
even if your 24 weeks, which most people would not have, but even if your 24 weeks extends past 12/31,
has to be by
it has to be done by 12/31. So it's a 2020 taxable event.
Mm-hmm.
Regardless, it doesn't matter.
Right.
So there's no tax reason for doing it now or doing it later. It's just, can we fix it?
Yeah. Yeah.
And then anybody that's over 2 million
automatically
gets audited. Well, I would not be one of the first ones to get audited. Now, there are quite a few that have already been submitted that we know have been submitted, and they're going through that audit process. But I would rather be middle of the road than the first one.
Yeah. And so what we don't know on those ones between 150 and 2 million is how many of those they may decide to audit.
Right.
Or, and again, there, as you're getting into those dollars, the loan forgiveness and the deductibility expenses becomes even more important.
Correct.
As the dollar amount of your loans grow.
Correct. Now, we would never, I've had some people call and say, well, if they're not going to let me deduct the expenses, I just want to ask for forgiveness. Well, that's not the answer.
No, that's not
I would never pay back a loan when I could get forgiveness on it and only have to pay a portion of it to the government. So we would still ask for forgiveness. We're still going to keep the money. We just don't know if we're going to be able to include expenses or not.
But hopefully soon we'll know one way
Hopefully
or the other.
soon.
And when we do, we're absolutely going to
we'll let everybody know
on social media and all of our website and everything else. So let's jump to the other part of the current legislation that's sitting out there, the second round of PPP.
PPP2.
PPP2, as we've heard many times.
Right.
There's some I think they learned a few things from the first round. And so this round is a little bit different in the approach.
It is. So the first information that I heard on this was they were going to do it in 2 parts. If you had not gotten a PPP loan originally, it would follow those rules. If you had, then you could get a second loan. However, it would have different requirements. The latest that I heard as of last night is everybody's going to follow the latest requirements. Which is there's going to be $300 billion available for PPP and EIDL. They are going to base it on a decline in revenue, and it will be based on a quarter from 2019 to 2020. So if my revenue declined second quarter of 2020 as compared to 2019, and the decline amount we don't know yet. Right now, it's looking like it's going to be between 25 and 35%. But if I had that decline, then I qualify.
Mm-hmm.
I have to have less than 300 employees. And that's it for now.
That's the main things we know right now.
Well, and they're going to include 501c6s in this
new
legislation as opposed to just 501c3s, which is what they did originally.
Right. Yeah. So in some ways, you can say this one is more focused on small business.
Correct.
And it's meant to try to get more aid to some of those businesses that really were hit hard.
Correct.
And because and
we're not able to get extra help. Some businesses were able to get extra help throughout the year from their organizations or something else. However, there's a lot. The small mom and pops, most of them, restaurants. I can think of 2 or 3 restaurants that I know have already gone under.
Yeah.
So it's those that they're trying to help.
Yes. Yeah. And I think that's one of the, through all this discussion, everything we talk about, that's one of the things we know, and that it concerns us every day is small businesses and how folks, we understand how you're struggling.
Well, and the publicity, I think, since they published everybody that got the first round of PPP and how much they got, I think that publicity has kind of made them zero in on, we need to help the people that need the most help.
Yes, absolutely. And I agree with that. And I think that's that's a positive learning experience that's come out of the first round of PPP, if you would.
Right. And the calculation is still going to be based on payroll, according to what they say now, 2.5 months of payroll, and it's going to be capped at $2 million entity.
Right. So some good changes there. Don't know a timeline. We don't know once it's passed, how soon it will happen or anything like that.
We don't even know if it's going to get passed.
Yeah, we don't know if it's going to get passed. That's still a question. We don't know how the funding is going to work, and we can make the presumption it's going to follow similar to use banks and everything like that. But the question would be, do banks want to participate? We don't have those answers.
Well, and I mean, so they funded $525 billion in the first round. There's $300 billion available now. The criteria is different. It could just run through SBA.
It could.
And SBA could just do it themselves. They have increased their technology, for lack of a better word, after the first round and some of the hiccups that they had with that and the EIDL. So it could just run through SBA. I don't know.
Yeah. So that's one of those things. That's one of those things we sort of know, but we sort of don't know.
Yeah, we don't know.
So let's kind of, if we want to, let's have the 2-minute Tammy wrap up. Let's say it like that. So in 2 minutes, what would you like to tell folks about this, or kind of summarize this?
Well, first of all, I'd like to tell you that everything that I've said that I don't know could change. And like I said yesterday we didn't have stimulus checks in the package, and today we do. So we are trying very hard to stay on top of it. I anticipate that if something is going to happen, it's going to happen by Monday. But I said that last week by Friday, because I figured they would be wanting to go home and they would not want to have this government funding bill looming over their head. But instead, they passed a stopgap measure. So Monday is kind of my deadline, just because Christmas is next week, and they said that they're going to stay in session until something's passed. So either it will get passed or they will drop it by Monday.
Right.
Because if not, they don't have enough time to draft it, sign it, get it signed by the president before Christmas Eve. And they don't want to be there Christmas Eve.
Right.
The biggest issues that I think that will get passed in some way, shape, or form before we're all done is the PPP2. I think that's going to happen. Stimulus checks, I'm still not convinced of. I think that if something's going to get pulled, it'll be that. Although that I do know, based on looking at social media, that that's the thing that individuals are fighting for. That's their focus. And then, anything else, I would really like for them to extend the Families First Act. I wouldn't like for them, if you've already gotten the benefit of it, you don't get it anymore, but just extend what we have. At least until, I would like for it to be until March, but at least until the end of February. Let us get past Christmas, get everybody hopefully past that spike that they're anticipating, and get vaccines out for those that are going to get the vaccine, get those out to people. And I think that then we may have some semblance of normalcy.
We might see some light at the end of a tunnel, but we're hoping it's light, not the train.
Right. And the last meme that I saw that really kind of hit home for me was, let's hope that, we all thought 2020 was bad, but let's hope we don't turn 21 and we start drinking.
Yeah. Yeah, I saw that one.
So I think that we are looking at an end, but that's just a guess on my part.
An end to this part.
Right.
And as we all know, we're going to deal with, we know from the standpoint of the virus, we're going to deal with this virus for years. Right. Absolutely. We're also going to deal with some of the economic effects of this for years, but we want to get through this terrible time now if we can. And we hope that is a short period of time.
The last thing that I'd like to say is, the Electoral College has voted. We feel sure that we've got Biden as president. We've got a runoff in Georgia that we're waiting to hear what happens with it.
Right.
But as far as year-end planning or future estate planning or future tax planning, that's still kind of up in the air.
Yeah.
I don't foresee anything happening for 2021, but after this year, I think that we'll have to reevaluate.
Absolutely. I think there's going to be some opportunities, different views on planning going forward. We don't know where taxes are going to go, but there in my gut, I know that to help fund the payment of this, somehow
Something's gonna
taxes are
happen.
going to have to go up.
Right.
We don't know what or where yet. There's
Or
been a
when.
lot of or when. That when something hot button like that goes, and that legislation has to start in the Senate, and the scenario could be that it's 50-50 split of senators in the Senate, if you will. So there's a lot of ifs, ands, or buts. But I'll add a but that at some point we know that there has to be some economic recovery measures to address the coronavirus response, as we have with other major events over the history of our country. So we have that. With that, if you want more information, you want to keep up more with it, you can go to our social media pages: Facebook, LinkedIn, Instagram, and
Twitter.
Yeah, Twitter.
Our website.
Yeah, and also go to our website, www.avizogroup.com, and follow us on all those various social media aspects. And of course, you can reach out to us here at the firm. You can find our email addresses on our website or our phone numbers, and you can call Tammy or call one of our great folks here that can help you out. And we appreciate your time and or the time you've taken to listen to this presentation. And we wish you a happy New Year, and most importantly, a Merry Christmas coming up.